Yo, guys, what's going on? Welcome to my favorite day of the week, Financial Fridays. Today, we are going to be talking about an interesting topic. I know we've been setting this up for about 2 weeks now. We've taken the last 2 weeks completely off from Financial Fridays because what we are about to start doing is instead of teaching you guys a little bit of this and a little bit of that, I have now structured the next 2 months worth of calls, and we are going to start walking through economics, okay? And a lot of people really don't even know what exactly is economics, and not a lot of people are going to talk about economics. So that's what we're going to start doing the next 2 months. And we're going to be talking about different things that make up what is economics. But we're going to start talking about it. We're going to start making sure that you, the viewers, people who are watching on recording, people who are watching us live, that you guys are informed, because the problem is no one's informed, right? So with that being said, we appreciate everyone who is watching live. We got a couple viewers right now live. We appreciate you guys being on with us. Those of you who are watching via recording, we appreciate you guys just as much. We hope that you guys will take this video and share it, because this is what people need, right? People need to be educated on what exactly is economics. We're not taught that in schools anymore. This is not something that everyone knows. So we're going to start digging down, and this, and this is not meant to be any kind of political conversation. So I do apologize in advance if it may steer that way, but some things when it comes to economics and finances, it just gets political. Okay. At the end of the day, it gets political. That's why Washington is so screwed up, because every day they fight over these finances and they fight over these things, and this is what you get. Okay. So I apologize in advance if things get maybe a little bit political, but hey, at the end of the day, this is more important than just about what you feel about politics or this and that. This is about exposing the truth of what exactly is economics and what affects you and what doesn't. Okay. So, and I'm really passionate about this stuff, as you can tell, and I really have been digging down and studying what is all of these different topics. Okay. And that's going to be our theme. We're going to be asking what is this? Because again, I don't think people really know what it is. They just hear buzzwords and they associate one thing, but it's actually not. So every week we're going to have a what is. This week is what is inflation, and we're going to be talking about that. So without further ado, let's have our first question. So what is inflation, right? And again, it's one of those buzzwords that we hear all the time. I promise you, I've heard it 1,000 times growing up. I've heard about it on the news. You hear about it. You hear, elderly folk talking about it. You hear about the young people talking about it. What is inflation, right? So basically inflation, it's a measurement. Okay. So there's a couple components to this. They have a couple different indexes that make up inflation, but it's basically a measurement of rising prices when it comes to goods or services that are within the economy, right? So anything that you buy or sell, whether that's a product or a good, it makes up kind of what is inflation, okay? Now, it's not necessarily the product or the service, it's the pricing of that product or service, okay? And this is important to you. Why? Again, I'm asking a lot of questions. Why? Because at the end, we're going to start answering some of these questions and it's going to make sense. But why does this affect you, right? So why is inflation even important? Why is it a relevant issue? This affects you because when inflation is high, so are your prices for things like gas, milk, bread, commodities, services, right? For instance, gas right now is getting expensive. It's getting very expensive. Okay, it's getting kind of crazy, and it is what it is. Okay, this is because of inflation, right? Your pool guy, if you guys have a pool and you have somebody come and service your pool, it's probably going to get more expensive because inflation's going up. Your cost of living is going up because all of these products are getting more expensive, right? So why? Why does inflation go up or down? Well, there's a couple different methods that economists have come up with in order to just kind of explain the reasoning behind why inflation is even relevant, right? So one of the ways that they have come to this point, it's called the cost push inflation method. Okay, the cost push inflation method is basically when production costs kind of increase and so does your price. Okay, it's unfortunate because when this happens, your pricing goes up, and for businesses, typically this means that their profit margin goes down as well. Okay, which if you are involved in any kind of business or you're in an executive position or anything of that nature, you want to have good profit margins. Okay, and that's one of the problems with this push-pull method of inflation is that basically it's dependent on your production price. Okay, and when this happens and production prices increase, so does your product. So, for instance, right, we had a time where milk was very, very, very expensive. Why was milk expensive? Because they had to go and milk the cow, they had to process it, they had to put it in the jug, they had to market it, then they had to ship it, and then they actually have to sell it, right? So all of that pricing was just a lot, okay? So that's what I mean when production prices increase, okay? The actual cost of how much it takes to manufacture a certain product, that's what happens, okay? The second one is called the demand pull method of inflation, okay? So this is basically when there's a huge demand for a product or a service or something like that, but a company physically cannot keep up with that demand, right? So for instance, when COVID came out, we had a water shortage, right? Everybody was buying toilet paper and water like crazy. Well, when this happened, the prices started to go up. Why? Because companies realized that there was a huge demand and they could actually raise their prices and have better profit margins, right? So, just keep this in mind. There is a thing called price gouging. Okay, this is not considered price gouging. Price gouging would be charging like $15 for a case of water. Okay, that would just be ridiculous. Okay, it has to be within a region, a margin, okay, per se, of an increase. Okay, and the government regulates that. I don't have specifics because once you start going to each individual industry, they're all different. Okay, they all have different margins that they can raise or decrease their stuff from. But if it goes above that, then obviously the government steps in and it's price gouging, and then they get hit with fines and all kinds of stuff, right? So that's another way. Another one that we've all heard a lot is the housing market. Okay, housing market. The housing market goes up and down all the time, and people complain about it, right? As of right now, the housing market is up. So that can be a good thing, and it can also be a bad thing, right? The housing market is just like any kind of financial market, like stocks or anything else. You don't want to buy a house when it's at its highest, because if the market goes down, you're going to lose money, right? So, and obviously as the economy does better, as inflation, goes up and down, that will affect the price of a house. And the housing market does have an impact on inflation, because if you have a lot of houses being sold, then obviously the economy is doing very well, which means that typically your inflation is sitting at a pretty equilibrium point. And we'll talk about that in a minute, what exactly percentage-wise do you want the economy to be? Because there is a part where it's over and there's a part where it's under. So we'll talk about that in a minute, right? And finally, the last part, it's actually called the expansionary fiscal policy, right? So basically, this is when the government decides that they're going to cut taxes. They're just going to taxes to businesses or even to people, to families. They'll just cut some taxes. So income taxes, business taxes, sale tax, whatever the case may be, they cut that. When that happens, this allows businesses to be able to invest more money back into themselves. They're able to fund more projects that they have. Well, when this happens, this makes them more wealthy. It builds a wealth around them. Well, when that happens, obviously, some of their stuff gets more expensive. Unfortunately, this is just the way that things go. So again, that's why it's important to kind of keep inflation at this equilibrium point. Okay, so just remember that. Okay, the whole point of this is to make sure that we have an equilibrium point. So my next question would be this, right? So is inflation bad? And to answer this question, it can be. For a lot of people, it can be because this makes daily things more expensive, like gas, right? When inflation is down, the gas prices are down too. When inflation is up, so are gas prices. So it's kind of a catch-22 because for businesses, it's great because they're able to make more money. Sometimes their demand goes down, but most of the time their profit margins are doing very well during this inflation period. So companies are doing well, but we as the people are unfortunately kind of stuck with higher everything. So keep that in mind. And it kind of depends. Again, it depends on what kind of method is affecting the inflation. And there's different methods on how to find that. You can just kind of go online and Google what's going on. And if it fits any of those three, you'll kind of get an idea of what's going on, right? So the next question would be this, right? So we know that inflation is not necessarily great for us. We know that it can go up and down, and we know what it is. So do we have anybody who's monitoring our inflation? Do we have an agency or somebody who is helping keep inflation from going crazy? Well, yes, it's actually a lot of different government departments that kind of come together and make up what exactly inflation is and trying to control that. So remember before we were talking about that equilibrium point. What is our equilibrium point for inflation? Typically, we would like inflation to be around 2%. This is good for businesses and it's good for us. It's not a huge increase and it's not a huge decrease, right? It's not bad for business, but it's also good for the people. It's very nice. Now, when we see inflation start to go up, that's when we start seeing the government trying to enact certain legislation in order to bring it back down, and vice versa, right? That's also why you'll see sometimes the government do some crazy things all of a sudden, like applying and funding a bunch of stuff that seems meaningless. Well, that's why. Okay, it's the government. They're passing legislation that will help try and get back to that equilibrium point, but sometimes it just doesn't happen. I'll be honest with you. Sometimes it just doesn't happen, and it just takes time. So they do monitor it, and it is something that they do keep a close eye on, and they monitor this like every quarter to make sure that there's a consistency. Right? You don't want to see huge spikes up and down with inflation because it's going to throw everything off, right? So the next question, how does inflation help or hinder the financial markets? Well, I'm so glad that you asked because that's what we do here, right? We teach about the financial markets. So naturally, inflation is a topic that we need to talk about. Well, when you're investing in stocks, okay, you have to remember this in the back of your head. It's not so much Forex. It can be because, again, inflation rates do play a part on currency rates. But typically, we're going to see a lot of this in stocks. Okay, you're going to see a huge issue with inflation when it comes to stocks. So in the back of your head, you got to remember, okay, I'm in a stock. This is an actual company that has to be profitable in order for me to make a profit, in order for the stock price to go up. Okay, so naturally, you would want inflation to kind of go up because it helps businesses. But again, it's kind of, it takes away from us because it makes things more expensive. Okay. Again, inflation goes up, prices for goods go up, but businesses have higher profit margins. Inflation goes down, their profit margins go down. And typically that's good for us because things get cheaper. Okay. So let's just say, for instance, okay, we're going to say this is a hypothetical thing, okay? We're going to say that I invest some money into Radio Shack, and I keep my stock for a year in Radio Shack, and off of that, I make 10%. Now, granted, I don't think that would happen, but hey, if I make 10% off of Radio Shack in a whole year, okay, off of my initial investment, and during that time, for whatever reason, the inflation rate rises to 5%. Okay, well, my actual profit that I would get to take home at the end of the day when I'm closing that out would actually be 5% because you have to account inflation. Okay, when we're talking about the inflation, Typically, this comes in the form of taxes, okay? Capital gains tax or a sales tax or a transfer tax or a fee. Brokerages will have fees in there. That all applies to inflation, okay? And when you're calculating how much you actually get from this, that's what you do. You take your inflation rate and you take, and usually they kind of bundle it all together and call it an inflation rate, but you would put all your fees and stuff together and that's your inflation rate. And if that's whatever percentage that is, okay, you have to subtract that from the total profit that you actually made, right? So for my stocks, I'm up 20% on Chevron, okay? Right now, the inflation rate at this moment is roughly around 2%. So if that's the case, and I was to close out today, I would only be making actually 18% when you account for all the fees and transaction fees and taxes and everything else. That's how much you would get, okay? So just keep that in mind. Now, you may be wondering, okay, so now we know more or less, who's monitoring it? What is inflation? Is it bad for us? How does it affect us in the financial markets, et cetera, et cetera? So who is the real winner when it comes to inflation? And the answer to that simply is businesses, okay? Businesses / the government are the big winners when it comes to inflation because, again, their profit margins are better when inflation is up, okay? For us, it's not that great because everything's more expensive. Gas, bread, eggs, food, water, clothing, electricity, cars, everything, houses, everything gets more expensive as inflation goes up, okay? Now, again, and this is kind of a question that came from someone that I was talking to during the week, and they were kind of asking me when I was pitching them this idea of we're going to talk about inflation, and they had asked, well, what has the inflation rate been in recent years? Like, what does that even look like? Because I know things have changed so much over the last 10, 15 years. Well, what's the inflation rate been? Well, to simply answer that, because I don't have a whole lot of time to go into every single year and explain why the inflation rate went up or down or, what happened, okay? This is the simple answer. It has ranged in the last 10 years from anywhere from 0.12%, that's 0.12%, up to 3.14%, okay? So the lowest year for inflation in the last 10 years was in 2011, okay? That was when it was at 0.12. Now, the highest was in 2015. So, and this year, our inflation rate, they're projecting, okay, this is very early. Typically, their first quarter projections are off a little bit, but according to the first quarter projections, we should be hitting close to 3% inflation rate, okay? That's not necessarily great for us as individuals, but for businesses, they'll do well. For us, it'll be So if you are investing in stocks, this would be a great time to get in stocks because we see that inflation's going up, so are their profit margins, so are their revenues, and that's what you want in a company, right? That's what you want. So, and like I said, the real winners are the businesses and the government, and businesses being really any business, small business, large business, corporate, non-corporate, whatever, LLC, whatever the case may be, okay? That's kind of where we're at. So I do want to open this up for a couple minutes, and I have a couple of announcements before we get to any questions that you may or may not have. If you do have a question, feel free to type it in below wherever you're at, and go ahead and ask away, and we'll answer those in a minute. But I do have just a quick announcement, and then if we have any questions, we'll address those. So if you do have them, go ahead and put those down below and type them out, and we'll get those answered. Just a quick announcement. Our stock boot camp is finally completed and done. We're ready to go. If you are interested in getting involved with that, feel free to click on our page and go in and just click the events and just say that you're going or that you're interested. What it'll do is it'll put you kind of in a group, and we have a lot of stuff that we're going to be throwing to you guys beforehand that is going to be helpful, that when you get to the boot camp, it's going to make sense, okay? And in the boot camp, we're going to go in deep into stocks, okay? There's going to be a lot of content when it comes to the stocks. So please, please, please make sure that you guys are, in there, and that you are really looking and getting prepared for stocks, okay? Because we want you guys to come with questions. You don't get as good of a trader or as even an investor. You don't become a great investor overnight. You have to ask questions. There's just certain things that you have to ask questions for. So please make sure that if you do have any, you go ahead and ask them, even if you have questions later on, okay? If you're watching this via recording, feel free to go ahead and just type some questions down there, and we'll address those as well. But other than that, I mean, I don't see any questions. I hope that you guys will go back and watch some of these videos, especially this one. We're going to be doing more videos like this for the next 2 months. We're going to cover a what is question. If you have a what is question that you want to cover, feel free to message us and we may add that. I do not mind talking about this kind of stuff for longer than the next 2 months, because again, I feel like this is something that our education system has not offered to people. We don't talk about it anymore. So it's time for us to start doing our own research and start doing our own investigation into what exactly these things are, and at least start knowing what they are before we start having conversations on the internet and trying to troll people about what exactly is this or that and the other. We have to know what it is first, okay, before we even get there. So with that being said, man, I really appreciate you guys hopping on. Again, if you're watching this via recording, appreciate you guys for watching this. But hey, I'm glad that we got this chance to go over what is inflation. Next week, we're going to be talking about a really good topic. I'm not going to give it away until next week, but we will see you guys hopefully on our Stock Sunday call on Sunday. And if not, hopefully you guys will be able to watch that recording. But hey, we will see you guys soon.